Jim, if there's one piece of advice that you would leave everybody with on this channel, what would it be?
Be worried, be careful, and get prepared.
It's rare that I get the opportunity to interview somebody who is described as a financial markets guru, a commodities legend, the best-selling author of multiple books, adventure capitalist, the Indiana Jones of finance, and above all else, a true gentleman. I've actually had the opportunity, this will be my third time to be able to interview the legendary Jim Rogers. Jim, welcome back to the channel.
I am delighted to be here, Dave. It's my honor. I'm flattered, delighted, flattered and delighted.
It's always a pleasure, always entertaining and extremely informative as well. Now, it's been over a year since we spoke. And if I quote you correctly, and correct me if I'm wrong, you said at that stage that the next bear market was going to be the biggest bear market of your lifetime. Now,
Yep.
since we spoke, we did get quite a strong correction in markets, but things have recovered since then. And I don't know whether it's a case of, as Keynes put it, markets can stay irrational for longer than you can stay solvent. But what underpinned that position last year? And are you still as convinced, and why?
Well, first of all, in 2008, we had a big bear market because of too much debt, as you remember, Dave.
Indeed.
Well, since 2009, the debt everywhere has skyrocketed. I mean, look out the window. There's debt everywhere now. Even China has a lot of debt now. China didn't have any debt 25 years ago, had very little. Now everybody has gigantic amounts of debt. And so when we have a bear market again, and I don't know when, you tell me when, you tell us all when, but when it comes, it's going to be the worst in my lifetime. It has to be. I mean, I'm just telling simple facts. We had a bad time in 2008. Since then, the debt has skyrocketed. It's got to be worse.
Well, we've got the U.S. national debt now, $34 trillion. How is that sustainable? If we look back at 2008 and we saw what happened in 2008, as you say, as the debt was growing, how are we able to actually sustain a debt level currently at $34 trillion?
Well, you say 34 trillion, yes, but that's the on balance sheet debt. There's a lot more that's off balance sheet. Government guarantees, Social Security, huge amounts of other debt, just government debt I'm talking about. So it's gigantic. And I don't like saying it, but people need to understand how the world works. And since we have so much debt, and you asked the right question, how is it sustainable? David, it's not. It's not, so you've answered your own question.
Well, we seem to be able to, at this moment in time, we're not cracking, we're not crumbling. So I'm still kind of flabbergasted how that is possible. I mean, we all, most of our viewers agreed with you last year when you said it, that it was unsustainable, and we seem to be able to continue. How much longer can we continue? Is it get 40,000, 50,000? What are we, 40 trillion, 50 trillion? What's the breaking point, or what's going to be the catalyst for that to actually collapse?
Well, it's usually something that surprises. Actually, the way these things work is something happens someplace that we're not looking at. Ireland goes bankrupt. I'm not suggesting that will happen, but I'm just saying, in 2007, in fact, it was Iceland. Most people didn't know there was an Iceland, much less that it could go bankrupt. And then a few weeks later, there was another one, and then Bear Stearns, and then another one, and what was that bank? Northern Rock in England. Then a few weeks later, there was Lehman Brothers. By then, it was on the evening news. But it had started a year before in Iceland, of all places. And that's the way these things work.
It's kind of like the financial butterfly effect. We don't necessarily know what's going to happen. It could be one small event in another country, or quite a large event in a different country, whatever it is. But it'll have that it'll have that knock-on effect. Is effectively what you're saying. We don't know where. So if we don't know where it's going to, and I'm kind of skipping ahead in a few of the questions I want to ask. if we don't know where it's going to occur or when necessarily, but we're quite convinced that it will, what are you doing to protect yourself financially and insulate yourself from that eventuality?
Well, some of the signs have already started. We're starting to see, lots of new people coming into the markets, which always happens after a long bull run. We're starting to see fewer and fewer stocks. There were seven stocks go up every day, and many stocks don't participate. So all of these signs, it's not my first rodeo, Dave. I've seen this before, and it's starting to happening again. Now, I don't know when they're going to ring the bell and say, okay, guys, it's over. What I have been doing is I have cut back enormously. I don't have many equities that I own these days. I own a few commodities, agriculture. I own some gold. I own some silver, but I've owned gold and silver for years, and I hope that I'm going to pass it on to my children so that someday they will have some gold and silver. I mean, these are things that have classically stood the test of time. Who knows? Maybe this time it's different. Maybe this time nobody will care about gold and silver or real assets, but they always have. So that's how I'm playing. I'm not selling short yet. And the reason I'm not selling short yet is because often in the very last days, you have a huge blow off. I mean, I don't know what else you call it, the blow off,
Mm.
where everything, or at least many things, just go straight up every day. In 1999, the NASDAQ went up, doubled in 6 months at the end. It just, people go nuts when things have been going on a long time. So that's why I'm not selling short yet. Now, who knows? Maybe I'll get it right. Maybe I won't. But I do plan to sell short at somewhere in the foreseeable future.
So you're saying as you come towards the end of a bull run like this, you get an awful lot of new entrants into the market. They're not necessarily as sophisticated investors, maybe, and they're chasing these returns that they're seeing. We see that parabolic spike then as those investors come in, and that's kind of a signal that we're getting an awful lot closer to the end of that bull market. Is that what we're
Well,
talking about?
it's often happen that way, All these new people come in and they call up their friends and they say, "Oh, I've discovered this new thing called the stock market, and it's so much fun, and you can make money, and it's easy. It's easy to make money." So everybody wants to play the game. I mean, as I say, it's not my first rodeo. I've seen this movie before. So those things are happening again. They
You've been
usually happen.
you've been monitoring financial markets for a long time. Um, what have you done differently that has made you successful or separated you out from the average investor? What is it? What is it, the way you look at or the way you research or observe markets that has underpinned your success, do you believe?
Well, if I've had any success, it's usually been by finding things that are cheap, which means that they're ignored. People don't care about them, where there's positive change taking place. And if you can find something that's cheap where there's change taking place, chances, and you do your research to know you're right, chances are you'll make some money. I'm pretty lazy there. I don't like trading. Trading is hard work, and I'm not very good at it. So I just try to find things that I'm going to own a long time because I'm so lazy. But if I've done my research and found the right things, then I can own them a long time. I have to maintain them, of course. I have to stay up to date. But that is a way that I've had some success.
Could you give us an example of something that kind of fits that category that you were, through your research that you were able to say, okay, this is cheap, this is sustainable, this is good long-term investment, and it's being particularly ignored by most everybody else.
Well, I mean, commodities in the late 90s, most people couldn't spell commodities. Many brokers had closed their commodity departments because nobody was interested. And I, for whatever reason, could see that supply was drying up around the world. But if you were in Asia in the 80s and 90s, you could see that, oh my gosh, there's gigantic demand for everything coming. And supply and demand have always been important and can make you money if you get it right.
So it's been hard work. So what you put in the hard work in comparison to those, as you say, Jason, the last days of the bull market, going for it's easy to make money in these markets, seeing that parabolic spike, as opposed to putting in the hard work and the research and actually identifying where there are opportunities in the market. That's kind of what
Well, David,
set you apart.
it's always been hard for me. I have friends who say, "Oh gosh, remember how easy it was before?" No, it was never easy for me. It was never, yeah, they made money once and they thought that was easy because they were getting it right. But I don't remember it ever. It's never been easy for me in any market. If
Do
you
you?
know an easy market, please alert me.
If I ever find out, I'll let you know. Um, Taking it back to just the current situation at the moment, the debt problem, national debt, personal debt, corporate debt, all of this. Um, do you have much faith in central bankers, the Fed or other central bankers, to be able to in any way manage this properly and avoid that next bear market, as you say? And if you do, I'd love to know. If you don't, I'd love to know why.
Well, I'll use the US again since it's the largest. The US has had three central banks in our history. The first two disappeared for various and sundry reasons. We now own our third. It's going to disappear too for its own various and sundry reasons. Not this month, don't worry. The Federal Reserve is not going to disappear, probably not in 2024, but it will because they're making many mistakes, which central banks have made before. And I mean, somebody seems to think that, or maybe many people seem to think that when you become a central banker, oh my gosh, you have all sorts of vision and intellect and you know a whole lot. These guys are just bureaucrats and civil servants and academics. They're not any smarter than any of the rest of us. They wouldn't have a government job if they were smarter than the rest of us. No, I don't have any confidence that they're going to get it right. Of course, they'll get it right at times because they have so much power. They can print and spend and borrow staggering amounts of money. If you can do that, you can certainly have a big influence, at least for a while. So do I have any long-term confidence? No, as I said, the first two American central banks disappeared. Don't worry, the third will disappear too.
So if we talk about the US dollar for the moment, because there are kind of some shifting sands in terms of reserve currency, the dollar hasn't lost its reserve currency status, but there are definitely some challengers emerging. We've got the whole idea of the BRICS countries and the challenge that may pose to the status of the US dollar as reserve currency. What's your opinion about the dollar's reserve currency status and its ability to maintain that in the years to come?
Well, no reserve currency, no international currency has lasted more than 100, 150 years or so. The US is coming to an end. All the classic signs are there. In fact, Washington is accelerating it. Washington has started cutting people off. The world's international currency is supposed to be completely neutral. Anybody can use it for anything. But now Washington is changing those rules. And if they don't like you, they just cut you off, or they put sanctions on you, or they take them away from you. So many people in the world, including America's friends, are starting to say, wait a minute, they can do this to us too. So everybody is now looking for something to at least compete with the dollar. I don't know what it's going to be yet. If you know, please don't announce it on this show. Send me an email because I'm looking for what it is going to replace the dollar. Logically, it would be the Chinese currency, but the Chinese currency is not even a convertible currency yet. So cannot be, that I can see, not yet anyway. the renminbi. So I'm looking, Dave. I don't know, but I know something's coming. And as I say, Washington is rightly or wrongly trying to accelerate, pushing people to get out of dollars.
So this is kind of continued bad management by governments and central bankers of their currencies. They have made some dangerous moves over the last number of years that has effectively weaponized currencies and weaponized financial markets, particularly in the Russian-Ukraine situation, which has really sent a warning out to other nations, both friends and non-friends of the US, that this is a potential risk for them. So it's kind of it's making that, although it's not going to happen overnight, as you say, it's making that it's putting that reserve currency status of the dollar in jeopardy in the long term. Not a clear challenger coming out as of yet, but something more than likely will emerge because this is what always happens, effectively, is what you're saying.
As you said it, it always happens, always has, and it always will. The problem that I have is I don't know what it is yet. I don't know, but last time this happened, when the pound sterling lost its status, we could see, the world could see that the US dollar was on the rise. That didn't mean it was going to succeed, but it did. But at least we could see what was happening. This time, I don't see anything. I mentioned, yes, China, but it's not a convertible currency, not yet. They're working on it, but it takes a while.
Indulge me for a moment, if you will. You briefly touched on gold and silver, which is obviously of particular interest to the viewers of this channel. You've talked about the performance of precious metals in times of economic strife. However, what is it that got you interested in owning precious metals? And you still see that as that quasi-financial insurance going into the future?
Oh gosh, I bought my first gold in 1981. Was that 71? It was still illegal for Americans to own gold. I bought some in Canada and some in Switzerland. It didn't tell you. I could see the change coming, I thought, and it became legal for Americans to own gold. So I own some gold. I own some silver. Dave, I'm an old peasant, and all of us old peasants know when things go wrong, you better have some gold under the bed. Better have some silver in the closet, because when things go bad, everybody will accept your gold and silver. They may not accept other things, but they will accept your gold and silver. It's always happened. I hope that if it happens again and we have a last gasp, a blow off for gold and silver, that I'm smart enough to sell if it gets that vigorous. I don't want to sell. I want to leave it to my children. But if we do have a wild blow off, you have to sell. You have to sell blow offs. So, but at the moment, I have no intention and no hope to sell my gold and silver.
Final question for you, Jim. If you were to recommend a book that has influenced you and your understanding of financial markets and would be of use to somebody who is relatively new coming in and looking at financial markets, what book would that be?
Well, I remember when I was early in the business, I read a book called The Intelligent Investor by Graham and Dodd. They were professors at Columbia, and it was an eye-opener to me. They explained how markets work, or at least they explained how you could find good investments. Another book I read about the same time was called The Money Game by a pen name was Adam Smith. It was actually Jerry Goodman, who's dead now, but those were a couple of books that had a big influence on me. At least I remember that they did. And they explained a lot about the world and what was going on. And none of that's changed. I mean, we still put on our trousers one leg at a time. We still do crazy things in the market, and we probably always will.
Jim, if there's one piece of advice that you would leave everybody with on this channel, what would it be?
Be worried, be careful, and get prepared. I
Super.
hope I mean, a lot of people are not going to survive, Dave. I hope I survive. I'm sure you'll survive. I hope we all survive, but it's only going to be the ones who understand what's happening and are prepared who are going to survive. That's true of all big bear markets, but the next one is going to be really big, so be worried.
Very wise advice. Jim Rogers, thank you very much.
Thank you. Thank you. Hope to see you in Dublin.